Hi there, welcome to my channel, The Face of Failure. It's Ravi here. This is going to be a beginner friendly playlist, and in this first video of a beginner class, I would explain how does candlestick form, what does a mean of red candle, what is the mean of green candle, how does it form, and how to trade those candles. I personally do not trade candlestick patterns, but I will explain it to you what kind of candlestick patterns are there. Almost every candlestick works the same way in every market. So once you know the technical analysis, with the same logic and the same setup with a little adjustment, you could use or trade any stock market in the world. So in here, I'm going to use a gold chart. So let's start with how does a candle formation happens. For example, if it's a green candle, then let's say market opens right here and then it go up like that, and then market closed at this point. So this whole area would become a green candle. How come? First, I will explain the candle. That is a full bullish candle. What is a opening point for green candle? This is a opening. This is an opening point of a green candle. If market opens here and it closes above the opening price, then the candle will turn green. I hope this concept will be clear. Now, for example, if market opens here, if it travel downside, but it did not close there, it will close up. Then the candle will look like this with a wick. So here, this area called wick, that means market has, after opening here, market has traveled this direction and then it closed above the opening price right here. So this way, the green candle will look like. Another example would be if market opens here, it traveled downside, then it went up, and then it also went this way, but it closed in this direction. Right here, that's a closing point. This one is a closing point. This one is an opening point for green candle. If market closed above the opening price, then it will turn green. So in this scenario, this is a wick. Where does it travel? But it did not close there. It closed this price. This is another wick. It traveled downside. So this is another wick. That's how green candle form. Now, what does a red candle means? Let me switch the color. If market opens here and it closed below the opening price, then the candle will turn red. Now green means buyer, red means seller. It will look like this. The full bearish candle will look like this. Now in another example, if market open here, travel this way, downside, and then travel more, but close price is here. So in this scenario, let me fill the color full. In this scenario, this is a opening price. This is a closing price. It's a vice versa than the green candle. Open here, closed below the opening price, travel this way, but it did not close there. It closed above. So this will create a wick. So this looks like a red candle. That's how red and green candles work. Now green candle means buyer, red candle means seller. So this is going to be the first concept. Now what is a trend and how to identify trend? What is a lower highs? What is a higher highs? And how does trend form? So we'll start from this trend. As you can see, this is a 15-minute candle. Right here, market is continuously coming down. You can see a fall. So every time it comes down, it is creating, that's the seller zone, another seller zone where market is. So it came this way. Then from here, a pullback happened, but it did not break the first lower highs. If it has break this lower high, then it will consider trend reversal or a pullback. But instead of breaking this lower highs, it's created another lower highs. So that's lower high number one, lower high number two. I'm going to mark lower high with blue, lower low. So first I'm going to mark lower high, all the lower highs. Lower high, lower high, lower high, and lower high. Now, another thing would be lower lows, lower lows, lower lows, lower lows, lower lows, and lower lows. I hope it's clear for now. Now, if market is coming in one direction, creating lower highs and lower lows, and any of the previous lower high it's not breaking, then it means market is in bearish trend. As you can see, it's coming down, lower, lower low, lower high. It did not break lower high. It went again down, created another lower low. Then this is another lower high number one, lower high number two. It did not break. That means the market is continuously in a downtrend. Then again coming down, created third lower low and third lower high. Again, it came down, fourth lower low, fourth lower high, fifth lower low, fifth lower high. Here is an important concept. As you can see, it was creating lower low and lower highs and coming down in a trend. So that means market is in downward trend where it's creating lower low and lower highs. Now, when to think that market has changed their direction? First, it will break the last lower highs and it will stop making lower lows. So in this example, after fifth lower lows, it has stopped making lower lows. So now any low is not lower than this. The another low is right here, but that is not lower than the previous lower lows. That means market has rested. It's not making any more lower lows. It means that now market has stopped making lower lows. And after that, there is a two possibility could happen here. The first one, the first possibility is that market will go into a consolidation zone, which means it will go into a sideways market. So it will spend time between the lower highs and the lower lows. The range could be anything. In this case, the range is almost, I think if you use this, then this is 15,005, around 60-point range in this example. But it could be anywhere. So in this case, the first case, market will go into a consolidation zone. It will start going like this, that. After spending some time here, because after continuously coming down, it needs a fuel. It needs a fresh buyers or a fresh sellers. And whoever is going to be stronger, the market will continue follow the same direction afterward. Now, if it will continue to go back down from this area, if it will continue to go back down, then it will call trend continuation. That means the downward trend has continued. But if it doesn't go down and does not break the lower lows, the last lower low, that means from this point, it will try to make a reversal. Now, what is a reversal? Reversal means that, so if somebody is selling from this point, right, this area, so what he will do, when market is coming down, he will continuously switching their stop loss to another lower highs. So at this point, if someone has sell at this area and market is right here, then he will put his stop loss at this point. Now, when market will break another lower lows and goes more down, he will switch his stop loss to the second number of lower highs. That's how the switching of stop loss work, right? So in this scenario, it will continue the same pattern. And where would be the last seller's stop loss? Now, in this case right here, whoever has sold in this area, that would be the last seller's zone. So either in this area and another is this area where there are a stop loss for sellers. Now, in order to understand the market, you need to understand the buyers and sellers psychology. Now, if market needs to make reversal, then it has to have take the stop loss of the last sellers. Otherwise, it will not make any reversal. So when this stop loss gets hit, the sellers will become buyers automatically. That's called technical analysis of how sellers become buyers and vice versa, how buyers become seller. So in this scenario, stop making lower lows. Now it will try to break the last lower high. When it does break the last lower highs, it means there is a strong sign that market has started to make their move in a reversal trade. This is a sign market is in a reversal trade, right? Because the buyers are very strong. It did not give any pullback. It breaks sharp level. Why this happened? Because market was continuously coming down. There wasn't only sellers. So whenever buyers got an opportunity here, they try to push market forward. But here sellers become stronger, and another try they try to push it down, but the sellers were not strong enough, so they were not able to push it below this point. And this area right here worked as a support zone. This area right here worked as a support zone, and from there new buyers enter and it pushed market right upside direction. So what it did here, it took out the first and second, the second last and the last lower highs liquidity. This is called sellers liquidity. This is called sellers liquidity. Now, in another word, what is buyer's liquidity? So when does buyer enters in this trend? It does enter in here, it does enter in here, and it does enter in here. So that means in this scenario, there will be buyers will activate from this point right here. From this point, buyers will get activate. So whenever market comes back again to retest this level, there is a higher chances that from this area, the buyers will activate and it will try to push market upwards. In this zone, you could enter in a trade. That could be your first entry point. In my future video, I will explain how to take entries, and but in this video, I'm going to keep it completely basic, a beginner's level, that how does trend work and what is considered breakout and how to trade a breakout. So let's see. So I hope your concept of how does trend works is clear. In another video, I will give example of how does buying trend works. But right now, market is in a selling trend. So I thought it could be a good example of how does market works, right? And now what is considered a breakout? Whenever market will try to break this level and candle sustain below the breakout range. Now what does sustain mean? Sustain means the candle needs to be closed after breakout. After breaking down, it needs to be closed. So in this scenario, which candle sustain? So as you can see, this candle break down the current level and then it did sustain. Yeah, it did sustain downwards. That is called breakout. Which candle did make a breakout? This candle right here made a breakout. That means the candle that did the breakout, the market should not go above that candle. If it will go above that candle, that means after breaking down, if market goes above that candle, that means breakout has failed and it was a fake out, not a breakout. It was a fake out. Sorry, it was a trap that created by buyers, and all the sellers get trapped while they were trying to trade this selling area. So in this scenario, where you will put your stop loss? So when market is coming down this way, after breaking down, let's suppose if you have entered here, then your stop loss should be bigger than the last candle that has breakdown. So that's the wick right there. You will put at least 2 or 3 points above the wick areas right here. That would be your stop loss. And if you are trading a breakout, then what could be the realistic target? In breakout, do not try to go more than 1:3. Always try to target 1:3 or 1:4, not more than that. So in this area, if stop loss is 8.42 points, then I will go for around 24 points. See this. So what does happen here? After breaking down, this candle did a breakout. It did not break this area, which means the candle that did breakout, it sustained below the breakout point, and breakout was completely genuine. This is a genuine breakout, and the trend continues afterward and it hits our target. That's how you will trade any breakout trade. In my future video, I will explain where not to take entries for the breakout and what are the things that could avoid. But in the beginner friendly channel, I'm just avoiding to make it to the advanced level. So I'm just trying to keep that concept very simple, very basic for now. Now in this case, what would be the another example of breakout? Same. What was the rule I told you? Simple. Find out another lower lows. After that, which one is? This one is another lower low. Right here. Now we will switch that candle. We will switch these things right here. So that's our point. Which candle did a breakout? This candle. This candle right here did a breakout and closed below the breakout zone. The last, it closed below the lower lows, right? So this means the breakout has already happened. Now, after breaking out, you will enter in as a textbook. That's not my way of trading market. I'm explaining what is a textbook theory, technical analysis of a breakout. Now what you will do, you will enter from here, put a stop loss above this candle and wait for a target of 1:3 or 1:4, which in this case, it did achieved. So we have entered in here. What was our stop loss? Above the candle that breakout 2-3 points above. So we'll keep it to the 12. And after that, 12 into 3, 36. That's our 1:3 right here. So it means our stop loss was safe. This breakout was completely genuine and it did achieve our target. That is an example of breakout. Now, what does fake out means? As I told you, breakout means the price sustained below the closing range and market continues to go in the same direction. Fake out means market will close in the same direction we are trading, but it will be reversed from the point. So that means, as per the technical analysis, what we will do here, because in this range right here, this is a lower highs. Here, market is making step going up, and here we will enter. So what our plan is, if this breakout happens, we will enter in a selling trade, right? As per technical analysis, that what breakout means. So here we will try to put a seller's entry right here. We will enter in a selling zone after putting a stop loss off. The candle's high 2-3 points, and target will be 1:3 or 1:4. But in this scenario, market did not go down. What it did, after closing down, it made a sudden up move and hit our stop loss. That means the breakout failed. That's called a fake out. In this scenario, all the sellers who are trying to sell after breaking this point, they get trapped. And what it created? It created a trap scenario and took out the stop loss of all the sellers. And after hitting the sellers of stop loss of sellers, it will continue to go up. That is a fake out concept. I hope this whole things gets clear. I'm not trying to add the more length to the video. For now, I'm just keeping it as simple as that. This is going to be the first part of what breakout, fake outs, how does candlestick forms, and how trend formation works. See you tomorrow.